asking me about credit card stacking and more clarity of what it is, how it works, and how it can be one of the most powerful tools to help you get money to be able to start a business and grow your business. And today we're going to dive in and decode credit card stacking. You're going to walk away and understand what it is. You're going to understand how it works. You're going to understand the benefits that it provides you. And you're going to walk out with all the information you need to be able to basically move forward and secure credit card stacking. Well, it's one of the most powerful ways that you could use to be able to fund your business. So let's dive in because we got a lot to cover. So first of all, when we talk about credit card stacking, what we're ultimately talking about is a way to fund a business where you're going out and getting a lot of credit lines or credit cards at exactly the same time. So instead of just going getting one line or one credit card, what you're doing is getting a lot of them or multiple of them at the exact same time, basically stacking the approvals. Now, this strategy doesn't just work for credit cards. I advise and teach a lot on funding stacking as well, and it's exactly the same thing. When you're going out and applying for a lot of credit and loans and credit lines at the same time, basically stacking the approvals you're getting. So why the heck would we want to do this? I'll tell you why. One of the biggest mistakes I see entrepreneurs make when it comes to getting money is that entrepreneurs are out there trying to get all their money from one source. So in their mind, they say, look, one loan for $250,000, one credit line for $250,000. That would give me everything that I need. But here's the problem with that. The problem is that a lender lending $250,000 in this example for a loan, a credit card, or a credit line, well, that's not an easy task to get done. A lender's really going to scrutinize you and your business aggressively to make a determination of giving you $250,000. It's a tremendous amount of risk to give one person that much money. What they would rather do is give this person 50, this person 50, this person 50, this one 50, 50. So now all of a sudden, they basically spread their risk out across borrowers. So they've got 5 borrowers of 50 grand each, which gives them a better probability of getting paid than giving all that money to one person. If they give you $250,000 and you default, they're out that 250. But if they give $50,000 to 5 people and 2 of them default, well, they're still making money on the other 3. And so what happens is this is how they spread out their risk. So it's easier to get money in smaller increments than it ever is to get larger increments. And this is why you never want to go to try to get all of your money at one place. And GDTV, what is going on? A Credit Suite partner in the house. By the way, if you give me your company name in the chat, then I'll give you a shout out right here on the live stream. So again, the benefit of stacking is that we go, okay, we understand lenders don't want to give a lot of money to one person. So what we want to do is we want to find the best strategy to get a little bit of money from multiple different lenders. Now, the first benefit we've already discussed. This gives us a better probability that we're going to get more money because we're getting some from this lender and this lender and this lender. And so as a result, we could typically get what we want or even surpass the amount that we want by using this strategy versus trying to go in and get it all from one lender. But the other secondary benefit a lot of people don't even think about is you're inadvertently creating competition between the lenders that give you money. So I'll give you an example. I actually had a Bank of America credit line once. Bank of America approved me for a credit line, and they said, hey, underwriter said, here you go, you're approved. And I said, I'm going to decline that offer. I appreciate it. Thank you very much. It means a lot, but it's just not going to work for me. And she said, well, why would you decline the offer? I said, because I already have a Regions line of credit that is substantially more. So I'm going to use that. I'm not going to ever use this credit line. It's just not big enough for me to even entertain using it. So I'd rather not have it report, and then I'll go to another bank and get an even bigger one. And she said, well, how much do you want? And I told her, and she came back and approved that amount. So this was somebody that gave me tens of thousands of dollars more on my approval because she already knew I had another line in place and they wanted to be the bigger line, so they knew I would use it. You understand that, right? You carry credit cards. Which credit cards do you typically use? They're usually the ones with the highest limits or the ones that give you the best points, the most incentive for whatever it is that you're looking to buy. So this is exactly what happens is that when you have 5 credit lines or 5 credit cards that show on your business credit reports, for example, well, then what happens is you can go back in 6 months and say, hey, I want to ask for a limit increase or even 3 months. And what happens is they pull that report. They see you have other competitors on there that you're paying as agreed as well, and that they've given you higher limits. They're more inclined to want to trump that credit issuer to give you a higher limit than they have. And you're ultimately just getting higher and higher limits. And this is why our typical client with credit card stacking will double their approvals in 12 months. So if they get $100,000, usually by using the strategy of asking for limit increases every 3 to 6 months, when a year comes, they've usually doubled that to $200,000. And again, every year it doubles, it doubles, it doubles, because the credit issuers continue to raise the limits because they see that you have competitors that have also given you lines and they want you to use their line versus their actual competitor's line. So there's a lot of benefits with credit card stacking, but these are two of our clear benefits, is that it helps us diversify the risk of the lenders, which helps us get more approvals overall. The second thing it does is it allows us to create competition between lenders and credit issuers. And what that allows us to do is then get our limits raised ongoing through time. So the amount that we get approved for doubles typically about every 6 to 12 months. Now, another reason that we really want to entertain credit card stacking is it's just fast access to money. So SBA loans might take you months to go through an underwriting process to get approved. With credit card stacking, you're typically getting access to your credit lines in only about 2 weeks to 3 weeks from when you start the process. Like when you start applying, usually in like as little as 7 to 10 days, you can get your lines up to about 3 weeks. So it really takes less than 2 weeks to get your money. So this is fairly fast and easy money. Plus, it works really well for startups. As a matter of fact, in all the time that we've helped, tens of thousands of startups get money, this program gives a new business more money than any other program I've ever seen. This is the most funding a startup is probably going to get, unless you have like insanely good personal financials that can help you get like a startup SBA loan, which is a thing, but it's super hard to qualify for unless you're like, I don't want to say rich, but like your financials have to reflect that. Most of us don't, right? So the result of that is that this is really one of the best funding options that we see for newer businesses. Why? Because it's no doc. So what that means is it means we don't have to supply tax returns. We don't have to supply P&Ls, balance sheets. We don't have to supply bank statements. And here's why this is important. The more documents that you supply to a lender, the more things they have to scrutinize to deny you or give you worse terms than you deserve. So if you're going, this is why SBA's loan process is so elaborate and takes so long. They're asking for personal financials, business financials, P&Ls, tax returns, balance sheets, and every one of those is being scrutinized, looking for a reason to turn you down. And when they have a question, they send you that question, that question, that question. And all you're just answering all these questions and supplying all this additional documentation, and a week turns into 2, and it turns into a month to 2 months. And that's why that process is so elaborate. But if we look at no doc financing, we don't really supply anything. Here we have to verify like our identity. They're probably going to ask for like our license, but they're not going to ask for all the financial documents. So one, it makes the underwriting and approval and funding process way faster. And the second thing is that there's less for them to scrutinize, therefore less reasons for them to turn us down. Now, by the way, again, if you're just coming in, give me your company name in the actual comments and I'll give you a shout out on the live stream. Like usually a topic like this, thousands of people will see. So it's like free advertising for you. What? Why is Ty at Credit Suite helping me do free advertising? I'm just that kind of guy. So type it in the comment and I'm going to give you a shout out. So the next thing is that the approval times are very, very, very quick. If you come in and say, hey, I want credit card stacking, and then typically you're going to get approved the same day. If it's like you're usually same day, business day. If you're applying at 6 o'clock at night, maybe not, right? But if you're applying at 2 in the afternoon, you're probably getting approvals same day, and you can actually start getting the approvals the next day. So you can find out how much you're going to approve for typically same day or within 24 hours. Now, the other reason that it makes so much sense for startups and other businesses is that a lot of these credit lines or credit cards you're getting through credit card stacking report to a business credit reporting agency. Multiple benefits here. First of all, over 70% of trade credit that we get from like vendors isn't reported to the business credit reporting agencies. And over 90% of all credit that we may be issued doesn't even report to a business credit reporting agency. So it's hard for us to build business credit because 9 out of 10 people that will give us money don't report the credit that they're actually giving us. So anytime we get an opportunity to get credit with people that report, we want to take advantage of that. And by the way, we have a Gio in the house. Happy Thanksgiving to you. I appreciate that. From Don Cleaner LLC from Rhode Island. What is going on? I hear you guys had like a nor'easter up there, so hopefully you're staying warm. And Bob is in the house as well from YouTube. Stuff for Guys. I appreciate you coming in, Bob. And Stuff for Guys sounds awesome. When as soon as I'm done with this, I'm going to look that up. So thanks for giving me a shout out. Thanks for giving me your company names and allowing me to share them on the stream. So building business credit. A lot of these reports to the business credit reporting agencies helping us build business credit. Now, there's another benefit besides the fact that so few report our accounts to the business credit reporting agency. The other benefit is these credit lines and cards we're getting are usually pretty high limits. They're usually going to be $5,000 limits or higher, sometimes up to $50,000. So what happens is you have these really high limit trade accounts hitting your business credit reports. And what that helps you with is it means your future approvals will be equally as high. So I can't usually get a $50,000 credit card limit if the highest limit I currently have is $5K. It doesn't work that way. If I have a $5K limit, by the way, on my consumer or my commercial credit reports, if my limit is $5K, the next credit issuer that comes along is going to approve me for 5, 4, 6, 7, somewhere around the amount of my highest limit. They're not going to go, this guy has 5, let me give him 50. Doesn't work that way. So what we want to do is add as high of a limit accounts to our reports as we can get. And that's what credit card stacking allows us to do. We're getting these $5,000 to $50,000 limit accounts that hit our business credit reports, and then our limits are really high that report. Then the next credit issuers that approve us for no personal guarantee credit. Now, don't get me wrong, credit card stacking, you're providing a guarantee, but the next credit issuers that look at my business credit report that I'm applying for without the personal guarantee, they see my limits that are high, and they give me $5,000, $10,000, $15,000, $50,000 limits as well. So this is like a jump start, like a quick start shortcut hack to initially build your business credit, because you're building it with these high limit accounts, which help you get even future higher limits and also take the recommendation from the credit bureaus and raise it as well. So for example, every credit report, Dun & Bradstreet, Equifax, Experian, they have an amount of credit they're telling lenders and credit issuers I should be recommended for. Well, with this, having these high limit accounts, that recommendation goes up. So it helps me get future approvals that are high, equally high as well. And Elias is coming in. Hello, Elias from More Success Consulting, and their website is moresuccess.com. I love that. I don't know how you got moresuccess.com as your domain, but kudos to you, Elias. That is hard to pull off. So make sure everybody you check out moresuccess.com. So the next thing is that there's no collateral required. This is unsecured. So that means I don't need stocks and bonds and 401ks in my house, and I don't need inventory and equipment, and I don't need account receivables. All the things that an SBA lender would want as collateral are not required here. I don't need to have any collateral, so therefore it is basically unsecured, which is good because a lot of us don't have collateral. It's why it's so hard for us to be able to get the kind of financing that we want to get. The next thing is that the rates on a lot of these cards are 0%. So that means that I can come in and get funding at 0%, especially when I need it most, especially sometimes in the beginning stages of my business. So if we think about this, if I'm a real estate flipper and I'm able to get $150,000 through credit card stacking at 0%, I can go buy a house at 0%, fix it up, flip it, and literally did that without paying any interest. That's pretty powerful. Because the other benefit of credit card stacking is you can usually take the cash out of these cards at 0%. This is why we call this program credit line hybrid, because it's really a hybrid of a credit card and a credit line. You see, the benefits of credit cards is that we can get 0% rates for up to 18 months, usually in the beginning when we first get it. The benefit of credit lines is we could take cash out without paying a hefty cash advance fee the credit card usually charges. But if we combine these benefits, what we see is now I can get 0% and take the cash out at 0%, which is super powerful if you're trying to use these cards and lines for things that you just simply cannot use credit for. You need the cash, like buying real estate. A title company isn't going to let you use a credit line or a credit card as your down payment or to buy that home. They won't allow it. But if I take the credit cash out of that card at 0%, they will allow that. So it allows me to basically take the cash out at 0%, and then use that for things that I just simply cannot use cards for. And there's also a lot of other enhanced security features as well, right? There's insurance, there's purchase protections. So I used my Business City card to do something last year. I love to go snow skiing, right? So I was skiing with my kids in Utah in December into January. Then weeks later, I was supposed to go to ski in the Alps. I try to go to the Alps and ski once a year. So what happened was I actually was skiing with the kids and I destroyed my body. I fell down moguls. I dislocated my shoulder. I broke my shoulder in 2 places. That was my January 1st of this year. Yay, New Year's, right? And then I'm supposed to go skiing in 2 weeks in France. I can't do that. I can't make that trip because my arm won't allow me. It's not healed enough for me to go skiing in those kind of conditions. So I have to cancel. Well, I had protection on my credit card that let me get 100% of my money back. If I wouldn't have had and used that card, I would have had to pay $4,000 for that and never would have got any of my money back. So this is why we want to have insurance, why we want to have purchase protection. But another benefit of these cards and lines is that we're actually able to come in and we're also able to get cash back and incentives on all kinds of things. Some of them have like 10 times points on Lyft. I use Lyft all the time. So if I'm getting 10 points for every dollar I spend, that's beneficial. Some give you lots of points for cash back. They give you 2 or 3 times the amount that you're spending in cash back points. Sometimes they give you incentives to get hotels and to get airfare and to get groceries and fuel. But you get the idea. Every dollar I spend, oftentimes I'm getting extra dollars back as incentives. Some of our clients use that to take their entire family on vacation without paying any money to do so. Some of them use it to cover all of their business travel. Some of it are using to cover all the fuel for their vehicle or using all the cash back to be able to get gift cards for their team at the end of the year. Whatever you decide to use it for, it just helps your margin. Like you're spending money like you normally would, but just by using these accounts, you're actually getting all these incentives, cash back points that you could use for other things just because of your normal period of spending. So a lot of reasons we want to get credit card stacking. Now the question becomes, how do we get credit card stacking? Well, you got a couple options. One, you go at it on your own. And I will tell you that I know a little bit about business credit, right? I've been doing this for like 15 years, right? I've been in financial services for well over 20. I wrote the best-selling book on business credit. Entrepreneur, Inc., Forbes all feature me. So like I know, a thing or two about business credit. And I can tell you that there's no freaking way I would ever credit card stack on my own. I won't do it. I won't. As a matter of fact, my biggest business credit cards, the ones that I carry like in my wallet, like if I'm trying to show these without trying to, like this is my number one card that I use. This is from credit card stacking. This is the only business card I carry in my wallet. I carry 2 personal and 1 business. And it's from credit card stacking. But I wouldn't do it myself. But here's why. Because in order to really successfully credit card stack, you have to first understand all the major credit cards out there, not the credit card issuers like American Express. You have to understand each one of their credit cards, what their approval criteria is, what kind of points they have, what kind of cash back, what their 0% term is, when they report to the Consumer and Commercial Credit Reporting Agency, all of which a lot of the info isn't even published. Then you have to understand which bureau each one of those credit cards actually pulls. Oh, this Amex looks at TransUnion. This one looks at Equifax. This one looks at Equifax and TransUnion. You have to know all those details on every one of these cards. Then you'd have to narrow down the best cards that work for you within all that. Hey, I want ones that only look at TransUnion so they don't see the Experian inquiry on there. And I want one that only reports to Equifax or look at Equifax because I don't want it to do this. And I want one that doesn't report to consumer reporting agencies but reports to business. None of this information is not even published. So you have to determine all of that on your own to even develop a solid strategy for you to apply for these credit cards. Now, once you've done all that, then the next step is you to mass apply for the main 5 to 10 cards you want at the exact same time. Now, if you were to do that, more than likely you would get a fraction of the money you would get if you just hired another company that's good at it and that's what they do. I'm not trying to self-promote. I don't even do credit card stacking. I'm just telling you, you're better off to go through another source that does because your results will be substantially better than you get on your own. So we had one client that didn't want to pay the fee for credit card stacking. And so he said, okay, I'm going to go out this on my own. We gave him advice. We even helped him. He got $12,500. If he would have went and hired an outside company, he would have got 75K. This is what we typically track and see. If you are doing credit card stacking on your own, you will usually get 1/5 of the amount of money that you get hiring somebody else. Now, here's why this becomes a problem. Because once these inquiries hit your credit report, you got to wait at least 6 months to try again. So if I try credit card stacking on my own and I screw it up, I find the best 5 cards to apply for, I apply, and I only get 2 approvals. Well, guess what? I'm done. Once those inquiries hit my credit report, I'm not even going to be able to apply again for 6 months. So you got one shot at credit card stacking. The reason all these applications are placed at once is because once other lenders and credit issuers see the inquiries on your credit reports, they will either not approve you or will approve you for way less money. So credit card stacking is developing the strategy to be able to find all the cards to apply for. Then it's about mass application in the same time period. I mean, if I'm going to apply for 10 cards, without exaggeration, all 10 cards are taking place pretty much within 30 minutes. That's what would happen. I would pull up each one of the applications. I'd fill in all my info. The only thing that would be left to done is hit the apply button. And then I would go apply. I mean, it would have to be ultimately within minutes in order to get the max benefit. Because once those see that you applied for other credit sources, credit cards, other places, you're just not going to get approved. So you can go at this on your own. And I just laid out the things you want to know, the considerations, the things that you want to do, applying all at the same time, all that you would need to know to do this. The other thing is you could just apply for a source that's what they do. And that source will charge you a fee. Usually it's upwards of 9 to 12% fee is what they're typically going to charge. And they'll roll the fee in to the amount of money that you get, just like an SBA lender would. So if I'm going to get approved for $20,000, then I would pay a fee of about 10% of that, about $2,000. And I would get my credit cards and lines for $20K. Then I would use one of those to pay the fee to the funding source for the $2K. I do this myself. And by the way, we send a lot of business to some of the top credit card stackers in the country, and they obviously give me a discount. I won't even accept it. I make them charge me what they would charge our customers because to me, it's worth it. Like what I'm getting is worth the money. But just know that you do it on your own, you get 1/5 as much money as what you'll typically get with a professional. You hire a professional, you're going to pay a roughly 10% fee on your money. They're going to roll it in to the lines that you actually get. So some things to think about and consider whether you do it on your own or whether you go to somebody else. And if you are interested in us referring you to somebody, I will pull this up on our screen. You can go to creditsuite.com/CLH. That's short for credit line hybrid, or you could just scan this QR code. And by the way, we don't do this. We're going to do is you're going to fill that out. You're going to talk to our finance team. They're going to want to know about you and your business and your industry. Then they're going to send you to one of the best credit card stackers that we know that can help you, because there's a lot of them out there. And some of them are good for restaurants, and some of them are good for marijuana companies, and some of them are good for service-based businesses, and some are good for real estate investors. So all of them kind of have a specialty of what they do. But if you go to every one of their websites, you wouldn't know what they do. It just comes from decades of experience and hundreds of thousands of applications that we've been able to figure that out. So we don't charge you a dime of money ever to help you get financing. If you want our help to help you get financing, we never charge you any money for that. Don't get me wrong. Doesn't mean the money's free, right? The lenders, the credit issuers are going to charge interest rates and points and fees on whatever they do. We even get a discount on that because we do volume. But for us, we never charge you any money. So if we can help you along the way, then go to creditsuite.com/CLH, and no cost, no inquiry on our end. We'll actually be able to get you an idea, say, oh, here's who you want to go through. We'll even get you a recommendation over there. We'll typically get you a discount on what you'd have to pay them fee-wise. Then they will give you an initial pre-approval with the soft inquiry, no hard inquiry. Then you'll know with no inquiry on your credit report how much money you can actually get. And then it won't be until you say, go ahead and sign the documents that you actually would retain them and they would apply. Then hard inquiries will appear on your credit report. They will help you take the cash out. If your utilization is too high, they will help you with bridge loans to reduce that. If you have too many inquiries on your credit report, they have solutions that will help you with that. But just keep in mind, in order to typically qualify for credit card stacking, you usually need a 680 FICO score or higher. So it's not based on cash flow. You can get approved with zero cash flow. Remember, it's no doc. It's not based on collateral. Remember, it's unsecured. There's no collateral used for approval. It's only based on personal credit quality. And here's the good news. Even if your credit's not good, they will use the credit of somebody else instead. So they will actually use a mother, a father, a brother, a sister, a friend, an investor. It doesn't matter. If somebody else wants to be a signer, they will use that person's credits for approval, and they will not even use yours. So even if your credit's not good, you can use a signer's credit to get approved. By the way, 50% of our clients that get this program are getting approved using somebody else's credit, not even their own. It's somebody else that wants to invest in their business or help them out that's letting them use their credit as a way to get money, because it's easier to do it that way to get like cash from these people to actually invest. So hopefully that helps you out a little. Now, Residency Pro says, with all the inquiries, how do you handle them post receipt of money? Having too many inquiries kills your credit score. So credit inquiries really do not kill your credit score whatsoever. As a matter of fact, if you look at your credit, well, let's just do basic math here, right? So first of all, inquiries account for 10% of your overall FICO score, and utilization accounts for 30% of your overall FICO score. So inquiries are going to have a minimal impact on your score. If I went and had 5 inquiries for credit cards today, or even 10, I probably wouldn't even see my credit score drop 5 points. I wouldn't see it drop to 10, but I might not even see it drop 5 points, because so little of it has to do with inquiries of your credit score. So keep in mind, the other thing is that you're also able to have those have less of an impact in about 6 months. Meaning if I put some inquiries, if I say, okay, I'm going to get approved for $120,000 with this program. I got pre-approved, no inquiry. And I say, lender, go do it right now. Well, then they put, let's say, 6 inquiries on my credit report. Those 6 are really going to have minor, if any, impact on my score. And in 6 months, those inquiries won't even affect me. So I have the ability to go back and apply for more credit and financing, even without those inquiries. But keep in mind, having 6 or more inquiries in the last 6 months could mean that you don't get approved for this program or get less than you normally would. Having utilization, your balances compared to your limits, of 30 or 40% or higher would either mean you're not going to get approved, or you're not going to get approved for as much money as you could get. So these the funding sources that do this will help you in those areas. If you have too many inquiries, they'll suggest somebody that helps you remove those inquiries. If you have utilization that's too high, they'll recommend you to somebody typically that has a bridge loan that you could pay down the amount of money that needs to be paid down to be able to qualify for higher approvals. Now, it doesn't mean everybody will get approved. It doesn't mean your utilization is so high that they can't help you, or you have so many inquiries they can't help you. But I'm just giving you some of the guardrails that is actually looked at for approval for this program. Okay, and Residency Pro says, how about personal income? So they're typically looking at all of your income, all of your revenue. They're not verifying anything. It's no doc. Remember, this is no doc financing, but they will ask you for your total income, your total revenue. So those kind of things they're going to ask for. But a lot of the approval, unlike SBA loans, doesn't have to do with your income. More of your approval has to do with credit quality. For this program in particular, your income, not as much of a factor. Credit quality is a factor. So some things to keep in mind there. And Residency Pro says, hey, apologies being a good applicant for additional money. No worries at all. Hopefully that helps you. So personal income, not really a factor when it comes to these accounts. And Residency Pro, thanks for the questions. I always like the engagements and questions. It makes me think about what I missed, so I can cover that stuff next time. So don't forget, if you're interested in getting approved, you can go to creditsuite.com/CLH. We're not going to charge any money. What we're going to do is evaluate you, see where you're the best fit, and then recommend the right funding source that works best for your unique situation. Okay, we'll even help you through the process, help you get discounts on pricing, all of that stuff. And if you want to go at it on your own, we covered a lot of the stuff you need to know to do so. I even have a lot of my videos on my Instagram, YouTube Shorts, and my TikTok channel. Even talks about which cards look at which credit bureaus and all those factors that you'd want to know if you are going at this on your own. But heed my advice. Definitely one of those programs is better to use a finance source. You usually get 5 times more money than you get on your own. So hopefully this helps you out. If you want any more help along the way with credit card stacking, you can go to creditsuite.com/CLH, short for credit line hybrid. You can also just Google credit line hybrid and learn more about some of the ins and outs of credit card stacking. Thanks for tuning in. Thank you for tuning in and saying hello for all of you that have engaged and give me your actual company name, and let me have a shout out for all the questions here as well. So don't forget, we are live Tuesday and Thursday at 1 Eastern, talking about the kind of topics that help you grow a successful business and get money. So make sure you like and subscribe if you get that value from this training, and keep your eye out for our